truth about Activision Blizzard stock. Okay, this is going to be a pretty basic one, pretty simple one, and it's going to piggyback on the analysis we did on Electronic Arts. And the reason why is because Activision Blizzard and Electronic Arts have very highly correlated stocks. EA here is in the light blue and Activision here is in the dark blue, and I mean they look almost the same. If you zoom out a bunch, EA has well outperformed Activision in the long term, but they're still really highly correlated. But the play on EA and please, I would, like, go watch the video on EA because it's going to break down all the fundamentals that you want to understand going into this. So once you watch the video on EA, come back in Activision. And the reason why is because, like, I wasn't going to do a video on Activision because EA was already a really great trade, like we established in the EA video. But the upside on Activision is actually really nice, and it piggybacks on all the same analysis in the EA video. So watch the EA video and then come back because Activision can make you more money. Okay, is that cool? Is that fair? Is that okay with you? You're looking pretty much at the same thing. Really high PE, but I mean it's not a big deal. They've got great financials. If you look at their charts, they've got really strong revenue. It's just decreasing a little bit more recently. They're basically the same industry as EA. They make video games, they subscription models, upsells, in-game purchases. It's all the same. The revenue is amazing. Their market cap, like we said, is like 45 billion, and they're bringing in 7 billion in top line revenue. Gross profits like 5 billion, and then their earnings are about $1.5 billion, which is phenomenal. I mean, it's just really good. It's about a 20x multiple. I mean, everything about the numbers looks great. It's literally the same as EA. Like, all the numbers here look great. If you look at the statistics, the book value is probably going to be the one thing that doesn't look as great. You're looking at about $16 a share for a $59 stock here, which is pretty aggressive and kind of a lot. And the short ratio, same as with EA, it's pretty low, 2.5%. Not a lot of people think it's going to go down because not a lot of people know what the hell's going on with it. But it really, you're looking at it almost the same thing. It's just a bear flag. So you got this downturn right here. This is from conservatively like $80. So you're looking at a breakout of the wedge here at like $50, give or take, $55. Subtract 30 from that, and you have a price target of about $20 to $25. I'm gonna say conservatively the $25 price target. You do 55 minus 30, you get about 25. I think that's really reasonable. If you just do some quick finger math on this stock, I mean, it is no stretch of the imagination that by the exact same logic of our EA position, our EA analysis, you've really got the exact same setup going on here with a bear flag. You're just looking at taking the height of your drop and adding it to the stock on a downturn after it breaks out of the wedge. You basically just take this, do some quick finger math, and just drag that over here. You got about the exact same height. And a price target right around 25, 30 or so. I guess if you're really conservative, you could do 30. I think that these guys, I mean, pretty reasonably should go to about 25. I mean, it's just not that difficult to see it happening. The breakout point looks like it's around $50. If you want to be conservative, I would do your target around like 50. Like the moment it hits 50, I would probably, I'm thinking like shorts once it hits 50 conservatively, and then all you really want to do after that is have sort of a stop level at like 57 or so. As long as you have that set in place, you should be looking at a max loss of like $7. You do that in terms of equities. You do it in terms of contracts. And I'm interested in is looking at it in terms of contracts because it looks pretty freaking nice. So if we go over, and I mean that's about the only thing like I want to talk about on the stock. It's literally the same analysis as with EA. I mean there's not much else to look at here. If you look at their annual report, it's really basic. They're just saying like, hey, we make video games. We're exposed to international currency risk because we make video games and we sell them internationally. A ton of people are trying to do what we do, and so we have competition. It's very similar to EA, which is because they're just such similar companies and such similar industries. They bought King, which is great, but I mean, it's still like they're in the game industry, right? It's like not a difficult thing to understand. The stocks are so highly correlated that it's almost like pointless to look. I mean, they're basically going to do the same thing. It's the same setup with both of them. It's not like that difficult to understand. So here's the cool part though. When we look at the options, so we'll call it conservatively a $30 price target. If we look at the exact same expiration dates in August, what you're looking at here, if you have like called a 30 target, you can get basically some super cheap 40 puts for like, give or take $1.50, which is giving you 10x upside on that. You get 45 puts for about $2, which is about a 7x return. You can get 50 puts for about like $4. That's going to have an inherent value at 30 of about 20, which is going to give you about a 5x return. So really what you're looking at here is the exact same play, but with EA you're looking at like a 6x, 5x, 6x return. But with this one, what's cool is you got two options. The first option is you buy like 55 puts. These will probably be like $10 once the stock goes down to give or take 57, and we'll call it like $7 probably. So you're looking at you invest 7, and then you're gonna have an inherent value of 25. So it's 25 by 7. Like low side, you're making like 3.5x, which isn't like as great. But if you get to these far out of the money ones, this is really where the gold is. So you can get like $40 puts, 37.50 puts for like $1 if you kind of wiggle in on that bid. I think pretty easily you should be able to get 37 buys for $1, maybe 40s for like $1.50, $1.60, and that's going to give you a really nice return of about like 6.5x, which is basically very similar to EA. And if you look at some of these further out of the money ones, you can get these for about 20 cents. You're looking at kind of the same level of growth. Maybe like $4 value here, 4 over like 0.4, you're looking at about a 10x return. So that's really where the money is here with EA. These far out of the money puts, you're looking at potentially like 10x returns on these. It depends on where you enter, but if you just stay here on the bid and only bid to like get 10x returns, what's cool is this stock is it's like cheaper than EA, historically less volatile than EA, and so you can make the exact same trade with EA, but do it with ATVI. And it's literally the same logic, everything's the same, except you're just buying contracts that are a little bit like closer to the actual current price because it's a cheaper stock. And these contracts looks like they have about, I would say conservatively 100% more value in them, which in terms of this trade is the equivalent of adding another 400 or 500% onto your bottom line. Since the original trade was 6x, this would turn that into 10x or 12x with enough volatility and enough time value. So exact same trade as EA, exact same logic as EA. Go watch the EA video to understand the EA trade. But I would recommend you kind of split your position in between the two here, with obviously conservative things. And obviously, you want to set a stop loss like we talked about here. Yeah, so very similar. Basically, everybody on the inside is selling, and 0 people are buying in the short term. It's a pretty basic. It's literally the same as EA. You're getting a lot more leverage and upside on these puts, which is really nice. So it's a market play based off of like the market going down, which is basically almost 100. Like that's just kind of happening right now, and then it's just a bear flag. So probably I would like split the position size you're gonna do. Maybe split it in 2, and do half and half if you want like solid diversification. If you're going straight equity, I would just do half and half. I guess if you're going straight equity, the upside here is like $30 on a $59 stock, so it's about 100%. And the upside on EA is very similar. It's about $50 on a $100 stock. So basically equity, they're the same. But with the options, the far out of the money ones on Activision are going to give you a couple 100% more gains. So definitely would recommend weighing into that when you enter the trade, with the exact same logic as EA, but just more upside, more leverage with Activision. So yeah, really cool. That's kind of the bigger takeaway from there. Make sure that you go watch the EA video to understand the importance of this trade. So hopefully you can take it and make probably like 7 to 10 times your investment if it goes right. I really hope it goes well, because that looks like a really dope a bear flag, which is nice. And you've also got like this really big like indecision candle, which is exactly what you want to see before a big movement, where it's got like this gigantic body or this gigantic wick. Like the wick is really big, but the body of the candle is really small. And this is when it opens and closes at a very similar price. And this is usually what happens after you have a really big, or right before you have a really big upturn or a really big downturn. And so as long as these guys, conservatively break below and stay below, 50, 52, 2, like 50, then you're looking really at a pretty nice trade here that can go really well. So that's kind of the big takeaway here from Activision. Hey, this is John. I want to thank you so much for making it to the end of the video and hope you get a ton of value from the stock that we just broke down and hopefully learned a lot about them. Now, what's cool is if you have an investment that you think could look really nice, or maybe it's a potential investment that you're on the edge about, or maybe it's a stock that you're holding right now that you're just a little bit curious about, or maybe you want to get an outside perspective on it, what's cool is if you leave a comment down below with the ticker of the stock, I'll actually put it in Queen for a potential new video coming out. Now, make sure you also subscribe so that when those new videos do come out, or when these new stocks do come out, you'll be able to get, YouTube will know to send you the stuff, and if you click the bell, you'll actually directly get a notification so that you don't miss any of the new investments that we break down on this channel. Now, what's also cool is if you want to learn how to outperform 99% of investors and radically limit your downside, even if you can't pass a finance test for your life or have nothing to start with but a few spare bucks, I want you to open up a new tab right now, or go to a new browser, wherever you are, and I want you to go to stockmarketsecretsexposed.com. And inside Stock Market Secrets Exposed, you get instant access to a course I used to sell for thousands, a very high-level seminar I gave. The students literally go through and in their first month make 5, 6 figures, and I can't guarantee anything, but I know for a fact that this stuff works, and it's gold. What I want to do is I want to give you this course I used to sell tons. I want to give it to you completely for free, so you can learn the top 35 secrets that you can use within the next week to really crush your portfolio, really double it, and radically limit that downside. So if you want instant access to that, what you got to do right now is open up a new browser tab and go to stockmarketsecretsexposed.com, and I'll send it to you for free. Okay? Sound cool? Sound fair? Thank you again so much for watching, and I will see you either in another video on here or over in the masterclass. Thanks. Bye.